Hi, this is Amy with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 13th of June. Starting off with the FTSE 100 as usual, where we've been stuck in a range between the 50 and 200-day moving averages. 200-day line, the grey line there, 75.26. The 50-day line, 77.13. Resistance line there from back in April as well at the same level as the 50-day line. And just looking for a break to the upside, 76.30 plus. On an end-of-day close basis could do the trick, or if you're more fussy, you might wait for the RSI to get back above neutral 50 versus 44 at the moment. We haven't really been above the neutral 50 level since the beginning of last month, which is quite a long time. The plus point was, though, that at the turn of the month the RSI went down to 30, and that tends to be the buying zone for the FTSE 100, and I suppose that's something to remember for future reference. Moving along to the DAX, and here we've got a situation where the market looking rather more sprightly than the FTSE 100. Gapped higher yesterday, start of the week, and basically holding above 16,000. Above the 16,000 level, looking for not only a retest of the resistance of last month, which was around 16,300, but looking for the top of that rising trend channel from September as high as 17,000 by the end of next month. No weakness currently expected below 15,700, which is basically the post-April or post-late April support zone for the DAX. On to the Dow, where sitting on at the edge of our seats still, waiting for the break of a resistance line there from last April, and it looks like the market's done it again, although obviously we had a one-day wonder last month, at the beginning of last month, and that gave us a rather nasty bear trap. So maybe we want 2 days above that April resistance line, above 34,000, looking for 34,700 initially by the end, or 34,800 by the end of this month. Big picture target over the summer up to 37,000, maybe August or the end of August, something like that. But obviously everything depends on the interest rate situation, which currently looks like a bit of a car crash. On the downside, we've got the 200-day line there, 32,700, in case the Fed does something idiotic. Otherwise, ideally, we stay above the 50-day line, which is rising sharply and encouragingly at 33,500. RSI right in a good place at 62, so allows some gas in the tank for a move to the upside. The problem market out of the ones that we look at the moment here is actually Bitcoin, which has been hit by the authorities trying to stamp out the crypto space. So far not working quite as well as they might want, but we've got support there, the old resistance from August to February, 25,000. Haven't needed to test that yet. We're in a no man's land between that and the old March support at 26,700. The trigger for a new leg to the upside would be a break of that April resistance line and the 50-day line around 27,300. So it's probably worth waiting for that, or waiting for the RSI to break back above the neutral 50 level versus 44 at the moment. On to the stocks, and once again, too many to choose from. Not any massive movers, but still quite a decent bunch, I think, today. The first one is Andrada, which was helped by a note from Hannam, and obviously everybody loves Hannam and Partners. We broke through the 6.1, 6.2 resistance area, which was a bit sticky over the recent past. We had a golden cross buy signal in the middle of last month, which obviously should have told us that the shares were going up. That was around the 6 pence area. We're now up to 6.7. I'm looking for at least 8.1 over the next couple of weeks, perhaps as soon as the end of this month. Maybe up to 9.5 pence by the end of next month. Upside valid certainly while we're above the 50-day line around 5.5, and ideally we stay on the right side of 6 pence. Remember, 6.3 pence was our initial target after the shares delivered a bear trap from below November support around the 3.9 pence area. So far, Andrada behaving well. Stock which was behaving well and may do so again is Abingdon. Here we've got a V-shaped bull flag. Our initial target here was 12 pence, and above 12 pence we're looking, and we're still looking for as high as 20 pence by the end of next month. Nice saucer reversal there. Rising 50 and 200-day moving averages as well, and a double bounce above RSI 50 which should provide decent momentum. And really, we wouldn't expect the shares to be on the wrong side of 10 pence from now, ahead of a 20 pence target. Rather a more obscure stock, which I was toying with leaving out, but I think that would be a bit unfair, is Aterian. Here we've broken the 50-day line and the resistance line there from March. Got an uptrend line in the RSI window, and actually we're breaking the 200-day line, so that's around 0.92, above 0.92 and above the 200-day line. We're looking for 1.1 pence as soon as the end of next month within that rising trend channel from December. Nice bear trap there at the turn of January, February, so that's probably the reason for the momentum building now. On to Celadon, which has had a fantastic year to date. One could say, I suppose, it's had a fantastic post-March period in particular. We've got a rising trend channel from March. We've just ricocheted off the 50-day moving average, rising 50-day line there around £1.53, and above that looking for as high as £2.27. It could be as soon as the end of next month, so let's see if that particular prediction pans out correctly. But ideally we stay above the 140 area and even above the 50-day line ahead of a move to the upside. We also had an RSI 50 bounce, so bouncing off that neutral level, and hopefully that will provide further gains for the shares. Stock that I looked at a couple of days ago, I think, is European Metals, and it's making nice progress. Initial target here up to 49 pence, which is the top of that December triangle. Above 49, looking for 58 by the end of next month. So a nice recovery there for European Metals after the bear trap in May. Moving along to a stock which has been in a decent trend for much of the recent past, GreenX. Here you can see that we've done, we've sort of tried to copy Celadon in the sense that we bounced off ricocheted off a rising 50-day moving average. We've also broken that January resistance line there at 42 pence. Above that, we're looking for 66 or 67 pence as soon as the end of next month. Next contender is the stock which had an announcement today. Is going on to the OTC of the American market, Genflow, and here you can see that shares consolidating around a rising 50-day moving average that is at around the 3.1 pence level and above the 50-day line. Looking for a break, I suppose, of recent 3.2 pence resistance to take us up to the top of that broadening triangle from back in September last year as high as 6 pence. And ideally we see that over the next couple of months as the broadening triangle for you. Moving along to Mast, which has not been a particularly pleasant experience perhaps for some people over the recent past, but here we are trying to recover. Unfilled gap to the upside last month. We've held that despite a few support tests, and now we're well above the 50-day line at 1.1. Above that, we're looking for as high as 2.7 pence over the next 1 to 2 months, and RSI shaping up quite nicely above the neutral 50 level as well. So hopefully when that 50-day line starts to turn, we'll see added momentum there and get to 2.5 pence plus as soon as the end of next month. Petrel is next, and the situation is one of improvement with a break of that resistance line there from November, break of the 200-day moving average at 1.4 and above 1.4, 2.4 as soon as the end of next month. Great extended base there for the share, so I think now the logjam's broken, we should be on our way. On to Predator, where the shares have soared ahead today. Actually, shows you the benefits of not having a fundraise in an RNS, so maybe the relief there, delivering the goods there. But the current situation is we've had a bear trap island reversal, and we're looking for the shares to perhaps hit a line of resistance, which I'm trying to draw at the moment, as high as 11 pence by the end of next month, while we're above neckline resistance at 7 pence. See, that was the mid-May high, but that island reversal and also actually the bullish divergence with the lower low for June, but higher RSI trace should see Predator on its way, and maybe when it gets to 11 pence there can be another fundraise. Let's see what happens there, but better picture there for Predator at the moment. Rising trend channel from back in January. Moving along to a stock which has tripled over the recent past, and here we have Rockfire. Great setup that we had basically since October, November, breaking the 50-day line back in January and basically running above the 50-day moving average ever since. Current situation is we've gapped to the upside. This looks like a mid-move consolidation. An end-of-day close through 0.34 should be enough to give us 0.45 at that August resistance line projection from last year. So looking pretty encouraging there for Rockfire. Sound Energy, a bit of financing and other operational news today. Here, I'm looking for the shares to break through the top of the recent range at 2 pence. Top of the channel there from back in September, heading for 2.6 pence, hopefully by the end of next month, while we hold above 1.7 pence, which is recent support. We've got the 50 and 200-day moving averages both rising there to support the stock. On to Versarien, where the rug was pulled, but not after the shares just nudged our best case scenario target, well, one of them, at just shy of 7 pence. There was a possibility that we'd head up to the 200-day line around 9 pence, but obviously maybe that was quite an ask, given that the shares are up from a penny just last month. The current situation is that it's quite encouraging again, actually. Could be an inverted head and shoulders. So the support this month around 2 pence, echoing the support that we had back in March. If it is inverted head and shoulders, we should at least head back to fill that gap there at 4.6 pence, and then obviously there's a chance of retesting the main 6.5 pence resistance area. But key here is holding above 2 pence for Versarien. Stock which I haven't looked up for quite a while is Yourgene, and here, obviously, you could say the shares are bumping along the bottom, but just breaking that 50-day moving average at the moment. You can argue there's a resistance line break there as well. From back in February, that was versus 0.22. End of day close above the 50-day line, and we could be looking at a 2 to 3 month target here as high as 0.46, which obviously seems rather ambitious, but we have had obviously an extended bear run in the shares, and maybe this is finally time for the stock to get back above it has been above the 50-day moving average for the best part of a year, so pretty impressive breaking above it now. Just the last one today, a stock which seems to be in recovery mode on the fundamental side, and also doing its best to be on the front foot with the technicals as well. So a bear trap there below 1.2 pence, gapped up through the 50-day line, which is normally a very good signal. We've got the 50 and 200-day moving averages both rising now. Bullish divergence as well, so one would suspect that as little as an end-of-day close above 1.75 pence could take the shares up to 3 pence over the following 4 to 6 weeks. So that does actually look very encouraging indeed, and much more encouraging than it has for quite some time. That's it for me today. More updates tomorrow.